Hello everyone, I am Manisha Kavindya. Today I am going to present on the topic annual reports and their effectiveness. This presentation focuses on how annual report communicate information and why transparency is important for stakeholders. First, let us understand what an annual report is. An annual report is a yearly document prepared by a company at the end of its financial year. It includes both financial and non-financial information. Annual reports are important because they help stakeholders understand how a company has performed during a year and what its future direction is. Now let us look at the purpose of annual reports. One main purpose is to provide financial information to users such as investors, shareholders, banks, and regulators. Another purpose is to ensure transparency by presenting accurate and reliable information. Annual reports also help to build trust between the company and its stakeholders. In addition, for many companies, especially listed companies, preparing annual report is their legal requirement. Next, I will explain the key financial statements included in annual reports. These financial statements summarize the financial performance and position of a company. They help stakeholders evaluate liquidity, profitability, and company stability. The first financial statement is income statement. The income statement shows the income and expenses of a company during a specific period. It helps us understand whether the company made profit or loss. Investors and management mainly use this statement to evaluate company performance. The next financial statement is the balance sheet. The balance sheet shows the financial position of the company in a specific period. It includes assets, liabilities, and equity. This statement helps stakeholders understand what the company owns and what it owes. Another important statement is the cash flow statement. The cash flow statement shows how cash moves in and out of a business. It includes cash flows from operating, investing, and financial activities. This statement is very important because a company can show profit but still can face cash problems. Annual reports also include notes to accounts. Notes to account provide detailed explanation for the figures shown in the financial statements. They explain accounting policies, assumptions, and other important information. Without notes to accounts, financial statement may be misleading or difficult to understand. In addition to financial information, annual reports include non-financial and visual content. This includes the chairman's message, corporate governance report, and sustainability or CSR activities. Graphs and charts are also used to present information clearly. These elements make annual reports more attractive and easier to understand. Annual reports are effective in many ways. They support decision making by providing accurate and reliable information. They improve transparency and accountability of companies. They also help build investor confidence and enhance the company's image at the market. However, annual reports also have some challenges. Many annual reports are very lengthy, which makes them difficult to read fully. Some reports use complex accounting language that is hard for non professionals to understand. There can also be information overload where users feel confused instead of informed. Now, I would like to connect this topic to a real world example from the movie The Big Short.
This is your basic mortgage bond. All right? The originals were simple. They were just thousands of AAA mortgages bundled together, guaranteed by the US government. The modern ones are different. They're private, and they're made up of layers of tranches. highest level. Triple A's getting paid first, the lowest rated B's getting paid last, taking on defaults first. Now, obviously, if you're buying B's, you can make more money, but they're a little risky. Sometimes they fail. Chris, somewhere along the line, these B's and double B's went from a little risky to dog shit. Where's the trash? Behind you. I'm talking rock bottom FICO scores. No income verification. Adjustable rates, dog shit. The default rates are already up from 1% to 4%, fellas. And if they rise to 8%, and they will, a lot of these triple B's are going to 0 too. And that, you're too close, is an opportunity.
Okay, you're saying that at 8% the bonds fail and we are already at 4%?
That's right.
If they go to 8, it's Armageddon.
Yeah, that's right.
How come nobody's talking about this?
You're completely sure of the math. Look at him. That's my quant.
Your what?
My quantitative.
In this movie clip explain how financial information was hidden and presented in a misleading way. Due to the lack of transparency, investors and the public couldn't understand the real financial risk. This movie clearly shows the importance of clear, honest, and transparent financial reporting. It proves that ineffective reporting can lead to serious economic problems. Please look at the annual report page shown on the slide. This page not clear. This shows how presentation quality affects the effectiveness of annual reports. To conclude, annual reports are important tools used to communicate company performance. Their effectiveness depends on clarity, transparency, and good presentation. As future accounting and finance professionals, it is important for us to understand and analyze annual reports clearly. Thank you for listening. I am Manisha Kavindya.